Hey guys, it's Simon with Trade and Perform Coaching, and I am the coach. And I wanted to cover something. We had a really great example. People often ask, what does it mean when the market's in balance, and what exactly does that mean when it is in balance? Why is that important or not important? And so I'm doing a really quick video on balance days and what they look like, and why they say it is easier to trade the edges of balance from the outside back in versus from the middle out, right? So first, what is balance? What is balance and what does it look like? And why is it important? So balance is basically what we're looking at here. And we have two balances. This is balance in ES, and this is balance in NQ. I want to show that to you right here. Okay, and if we pull that in, and NQ is actually the perfect picture of balance. I'm going to go over ES in a second, but the characteristics of balance are that, first of all, momentum traders get killed in balanced markets. Why? Because they try to buy breakouts here and get pushed back to the inside all the way down for a move, and we're going to highlight it. They buy the breakout, they think, oh, the market's going to break to the upside. They come back down and they get stopped as the market makes its move all the way back down. Even worse, if you're an inexperienced day trader, they then turn around and go, oh, this is a breakdown right here, and I'm going to keep alternating ovals to squares to make this easy to see for everyone. And they go, ah, this is a break to a new low. The market's now going lower. Let me short here, and then they get shoved right back into the middle. So this is what they mean when they say in balanced markets, it's easiest to trade from the edges back into the middle versus trading in the middle. Why is the middle hard? I'm going to highlight it. The middle is hard because you can't tell if it's just trading back to them to the middle and then back to the downside, or if it's trading to if it's going to trade to the middle and then continue to the other side of the range. So this is the hardest area to initiate because sometimes it does roll back down, sometimes it does go all the way over, and if you look, it's pretty hard for most traders to maintain an NQ 5 to 10 point stop on NQ, which is what would have been needed to survive taking a trade in the middle versus just simply taking it on the edges. And then the other thing that you'll notice that's very interesting is when you do get the move to the edges, they're at new highs, right? Very tantalizing, especially in the NASDAQ when it moves up. You go, oh, it's going to break out, make me all this money. No, you get a nasty surprise, right? So if you recognize that we're in balance, you simply wait for the edges to show up and take the ride back into the middle. That is the easiest way to trade a balanced day. You also know immediately once you identified a balanced day not to over trade it. It is slow and grindy. Make sure that you set your mind to slow and grindy. Now, there is another type of balanced day, and that type of balanced day is a balanced day with a downside bias. I'm going to look to ES. So if you look at ES, we're going to draw a couple lines here, make it easy to see. You can see we are trending down, and that really, this is kind of our channel to the downside, right? So a couple of important points. You'll notice that we established a low here early in the morning. We established a high here. You'll notice we broke out to a new high. All the chasers thought, ah, this is it. We're going back to 2100, 2110. They get in. They immediately get stopped out. No thank you. You lose, right? If you look, we pushed to a new low here. What does the market do? Immediately pushes back into the middle. You'll notice that overall it is trending to the downside. However, this is balanced with clearly and obviously a downside bias. And you'll notice each time, here we come in, we break to a new low down here. Everyone jumps in thinking this will be the time that we break to the downside. And then what do? We immediately come right back into what turns out to be the middle, which is this large area around 2090. And those who are chasing each and every time end up getting smoked. Even if you eventually do catch the break, you have tended to lose so much money that you're generally devastated. Now, I want to give you an example of what a break from balance looks like, and we have a great example of that as well yesterday in ES. Right? If we look at ES and we pull it back to yesterday's trade, which we're going to do right now, and let's go to yesterday afternoon, and you can see again, going to go through the characteristics. Balanced trade, we established a high and a low, right? And you'll notice first time that we trade to a new low, everyone expects what we get over here. They all short, they all get squeezed back up. This was a little tricky. We didn't quite make it to new highs up here. We did break out of the prior structure that was here to the left, trap back in, take it the other way. Now, here's the trick. It's summertime trading, right? And this is called a break from balance here. And what you would have seen if you look on the NYC tick is an expansion in volume and an expansion in the NYC tick to the downside. And a lot of people got moved. However, got run over who tried to play this move back to the upside. However, there was a couple of clues. First of all, what you're looking to do is as soon as it makes a new low, you're looking at support resistance levels, which we don't have them here on this chart. And of course, you're looking for an immediate move back to the upside. But if you look, even after this stretch here, I'm going to change this, right? What happens? Market comes all the way down. Remember, balance is all the way back over here, right? We've broken, everyone gets convicted, right, and thinks, oh, we're not in balance anymore. This is a trend down, become a trend down day, right? We've broken balance. Well, the reality was that this was driven by a downgrade of the euro debt by the S&P organization. Okay, so what happens? We come in here, and all these people, while we're sitting in here, go, we're now in a trend day. We're going to go down, and we're going to start moving to the downside. But if you look, after the news came out, this is characteristic trading, summertime trading. After the news comes out, what happens? Oh, we're trading in balance. What's going on here? Well, what's going on is that everyone piles in on the short, and what does the market want to do? It actually truly is a balanced day, and everyone comes back up. And once we trap all the shorts who are trying to grab the momentum to the downside, and the market pops at the close right back into where? Right back into what for the day is now the middle of the range. I can show you that. Take a basic Fibonacci line, pull it down, 50-60 retrace, balance day, market finds its way back to the middle and closes there. So I gave you three examples today. A example of a true balance day where we just trade literally sideways in the NASDAQ. I've given you an example of a balance day with a downside bias. And I've given an example of a balance day that breaks on news, right? But then once the news is absorbed, we return to balance trading down here for the afternoon. We get an overcommitment of people trying to trade momentum on a balanced day, overcommit, and they are forced to get to cover their shorts right back into the middle of the range. So my name is Simon. I'm with Trade and Perform Coaching. I hope these short videos help. Everyone have a wonderful afternoon. I hope you made a lot of money. Talk to you later, guys.